Without further ado, we'd like to begin the results briefing for the second quarter ended September 30th, 2019. First, Mitsuaki Nishiyama, Senior Vice President and Executive Officer, CFO of Hitachi Limited. Tomomi Kato, General Manager, Financial Strategy Division. Yasuo Hirano, Executive General Manager, Corporate Brand and Communications Division. So, Mr. Nishiyama will give you the briefing.
Thank you. I'd like to give an outline of consolidated financial results for our second quarter. First, please look at page 2. The revenue was 4,221.3 billion, a decline of 6% year-on-year. IT segment and industry segments had increase in revenues, and as a life segment had an impact of divestitures, and also semiconductors and automobile materials market worsened for Hitachi Metals, Hitachi Chemical. This led to the decrease in revenues. Adjusted operating income was 297.2 billion yen, down 14% year-over-year. There was increase in IT and Smart Life segments. On the other hand, listed subsidiaries Hitachi Construction Machinery, Hitachi Metals, and Hitachi Chemicals decreased. EBIT was 290.5 billion yen. Agility Trains West stocks sales led to the increase, and also Hitachi Metals magnetic materials business posted impaired loss on fixed assets and goodwill. So EBIT went down by 61.8 billion yen year-on-year. So net income attributable to Hitachi Limited stockholders was 189.2 billion yen, down 2% year-over-year. Next page, slide 1-3. This shows the results of the 5 sectors and listed subsidiaries. Below, the listed subsidiaries in total for companies. Because of worsening of market situation and impact of a foreign exchange, adjusted operating income, as you can see, went down by 52.8 billion year-over-year. On the other hand, for the 5 sectors, adjusted operating income was 199 billion. Though there was impact of foreign exchange, that impact was absorbed. So compared to the previous year, this was an increase of 5.4 billion yen. Next, page 1-4. Waterfall chart of revenues and adjusted operating income. Left-hand side is revenues. Changes are shown. With the impact of divestitures, Hitachi Kokusai Electric and Automotive Systems business divestitures had a big impact. So impact reorganization was of minus 124 billion. Foreign exchange was 80 billion impact. And as others, 66.5 billion were the factors reducing our revenues. Lumada was increasing by 57.5 billion, but others had an impact of decrease in revenue. And right-hand side, adjusted operating income. The impact of reorganization was minus 6 billion, foreign exchange impact 12.5 billion. And as others, 15.8 billion negative impact was seen. Declining revenues was the major impact, and also investments for growth, 13 billion yen. This was in accordance with our plan, and including this, 7% or 297 billion was a result for the first half. Next slide, 1-5, are the revenues by market. The right-hand side, year-over-year, For Japan, it was 100%, and outside Japan, 88%. So there was decline overseas. In particular, China, 86%. Excluding China, Asia was 84%. So this is a major decline. And for other regions, we can also see a decline. However, the impact of foreign exchange and divestitures, if these influences are excluded, Japan is 102% year-over-year, overseas 95%. So relatively speaking, the situation was better in Japan compared to overseas. And China, building system, construction, and metals declined. And in Asia, high-tech and Hitachi chemicals, Hitachi metals also declined. Next page, slide 1-6. shows the financial position and statements of cash flows. Total assets at the top, 9,719.5 billion, which is an increase of 93 billion. However, with the change of the accounting standard, lease assets and liabilities both were on balance, and that impact was about 220 billion. However, because of trade receivables collection, as a result, in general, there was not so much increase. So besides the impact of lease on balance, we are able to reduce the assets. And the CCC cash conversion cycle was 71.6 days. Towards the end of the fiscal year, the target is to be below 70 days. And debt equity ratio 0.31 times, and total Hitachi stockholder equity ratio 34.4%. And cash flows from operating activities 205.6 billion, with similar level as previous year. Cash flow from investing activities was minus 207 billion. In the first half of FY2018, there were large scale sales of stocks, but that did not happen this year. And there was the expenditure of investment of including a company into an equity affiliate. So free cash flow was minus 1.3 billion. And slide 17 and others are the revenues by business segment. First, for IT segment, revenues was 102% year-over-year. Operating income increase of 108%. System integration increased, and domestic storage also increased. And as a result, there was an increase in revenues and income. A second quarter, 12% income ratio. That was the maximum in the past record. Energy, 91% year-over-year. In the nuclear energy business unit, to respond to new standards that happened last year, but this reduced this year. So there was a decline in revenues and income. Next slide, 1-8. First is industry. For industry air conditioning system, sales increased, and the water business BU is handling this, which was an increase of 2%. So operating income increased by 200 million, and mobility 91% year-over-year. The building system, railway system, both had an impact of foreign exchange. And in addition, the railway systems BU in the UK market revenues decreased year-over-year. And in addition, building systems BU sales price went down in the Chinese market, so there was a drop of 9% for revenue. On the other hand, adjusted operating income, though revenues declined, building systems BU cost reduced, so the operating income was similar to the level of previous year. Next, 1-9 is Smart Life 88% year-over-year. Automotive system business, there were divestitures of 97 billion, and operating income was an increase of 10.3 billion. Automotive system and the home appliance and healthcare businesses, these three were able to reduce cost and had effects of restructuring. So there were major improvements. Next is Hitachi High Technologies. Sales. With a decrease in sales of liquid crystal displays, so semiconductor manufacturing process equipment increased. With a decrease of liquid crystal display exposure systems and foreign exchange, there was a drop of 5%, and so there was a drop of 4.8 billion for operating income. Slide 1-10. First is Hitachi Construction Machinery. There was a large impact of foreign exchange. So revenues and income declined. Hitachi Metals in the middle. Compared to the previous year, the result was 88% year-over-year. Automobiles, semiconductors, and the addition, business or FA decreased. So 27.1 billion drop of operating income was seen. This is because of a reduction in revenues and also revaluation loss on inventories. And EBIT was dropped by 94.4 billion. This is because of impairment loss on fixed assets and goodwill in magnetic materials business. Hitachi Metals itself, the amount of impairment loss of magnetic material business was 42.6 billion, but the consolidated basis was 61.4 billion impairment loss. With the integration of IFRS, before that, Metal was using the Japanese standards and Hitachi was using US GAAP. Because of the difference of accounting standards, this difference happened. Next, Hitachi Chemical. Revenue dropped by 8% because of decrease in demand for semiconductor and automobile. And operating income also dropped to 7.9 billion, accompanying this drop of revenues. And as for others, operating income dropped by 5.9 billion. This is because of the impact of the consolidation of Hitachi Kokusai Electric, or rather, this is the impact of the consolidation of Hitachi Kokusai Electric. And corporate items and eliminations, it is minus 9.4 billion. Compared to the previous year, there was increase of strategic investments. And EBIT, 28.7 billion, declined. The previous year, we had a Hitachi Kokusai Electric, but Hitachi Kokusai Electric was sold. Next page, slide 1-12. First one, topics. Progress of Lumada business. Of the second quarter, in total, as you can see, revenue was 558 billion, and the forecast for was 1,170,000,000, which is increase of 4% year-over-year. As on topics, as for recent movement, Hitachi Vantara and Hitachi Consulting integration was decided to be completed in January 2020. The frontline delivery capabilities, Lumada business will play a key role, so this function will be strengthened. And we started to provide elevator remote monitoring and maintenance service in Southeast Asia. And Sumitomo Rubber Industries and PTC Japan, we use AI and IoT to deploy a high-quality, high-efficiency tire production system. So this is a collaboration initiative, and this will be introduced in 12 locations. And as business strengthening toward growth to develop a smart cities, Fraser's property In the APEC region, we will promote digitalization cities and buildings through collaboration. Hitachi Vantara announced a strategic alliance with Disney Parks to enhance operational efficiency of shows and attractions. This will start with facility maintenance and improve operational efficiency of attractions, but every year, tens of millions of visitors are here. So this is a type of smart city. So we'll make use of Hitachi solution portfolio to expand smart city-related business. This is one of the purposes of this alliance. And also, we complete our acquisition Chassis Brakes International to strengthen automotive safety solutions business on October 11. And today, after this, we are going to explain later the automotive systems and Keihin, Showa, Nissin, Kogyo integration was decided.
So please move on to 1-13 topics, ROIC improvement activities. So this fiscal term onwards, we have added ROIC as part of the important management indices. So in order to utilize this for the operation, we have modeled the ROIC tree. So we have the ROIC tree based on a different business and different segment. And we have established the objectives to proceed with our operations. And also, in order for the employees to be aware and conscious of improving ROIC in their daily work, we have introduced e-learning in Japanese, English, and Chinese. And we have begun this in September of this year. So in slide 2-1, we'd like to share with you the outlook for FY2019, the full year guidance. So the first half of the year, so for the 5 sectors, they were able to absorb the FX, and they were able to perform above the initial expectation. However, semiconductors and automotive demand had diminished. Hitachi Metals and also Hitachi Chemical, and also FX impact was quite large for Hitachi Construction Machinery. These have experienced decline in the revenue and earnings, and therefore overall we have seen decline in the revenues and income. Going forward in the second half, we believe the business operating climate will continue to be the same, and the FX $1 to 110 yen to the dollar was the assumption. Now that has been revised to 105 yen to the dollar. And so we have reflected the change in assumption of the FX. Hence, we have revised the full year forecast. So the revenues in comparison to the previous forecast down by 300 billion yen. 8.7 trillion yen as the forecast for revenue. And the adjusted operating income down by 80 billion yen to 685 billion yen. EBIT 605 billion yen. And also net income attributable to Hitachi Limited stockholders, 360 billion yen. This is the current forecast for the full year. Next page shows, just as the first half, we have the outlook for the 5 sectors and listed subsidiaries. So from the previous forecast, we have reflected on the FX impact. So for the 5 sectors and for the listed subsidiaries, the adjusted operating income, we have revised both of the adjusted operating income. However, for the 5 sectors, total adjusted operating income increased by 4.4 billion from the previous year. So this year's forecast is 472.5 billion yen. In fact, this is a record high number for the 5 sectors. So we would like to continue with this number. And also slides 2-3 onwards, this is the breakdown by segment. So the mobility, we have adjusted the adjusted operating income by 1 billion yen. And this is because of the change in the FX. Also, in 2-4 for the Hitachi Construction Machinery, 18 billion, and also Hitachi Metals 40 billion, downward revision on the adjusted operating income. And also the impairment loss for the Hitachi Metals have been taken into account. So 100 billion of decline in the EBIT is the revision we have made. And likewise for Hitachi Chemical, 11.5 billion downward revision on the adjusted operating income. That is all in terms of the explanation. So we would now like to move on to Q&A. We will bring the microphone to you, so please name your affiliation and your name. So any questions from the floor?
じゃあこちらの前の方お願いします。
Question. I have two questions. One, Lumada is my question. Revenue 2 trillion is the target that is mentioned. For data analysis, the core business growth rate seems to be slowing down. What are the factors for that? And also, towards the target of 2 trillion, what are the challenges and issues? Answer. The growth is slowing down, but we think this is going on steadily. So this will grow by n times, we believe. So I think that we have to expand the solution core and deploy that horizontally. Now, it is centered on the IT sector, but with other BUs together, Lumada should be applied more to other BUs. I think that is important. And to be more specific, for example, for the railway BU, we want them to use it actively, so a team was made to accelerate this movement. We made a new team for that purpose. And for overseas, Lumada business is still centered in Japan. So we want to expand by n times in foreign countries. We must promote that. The solution core should be expanded so that this can be sold to foreign users, foreign customers, and we must have a good delivery to do that. So human resources necessary, the frontline personnel should be strengthened. So we have many measures like training, and also M&A would be possible, or cooperation, partnerships would also be possible. And one of that is Hitachi Vantara and Hitachi Consulting integration. This is one of the means of strengthening this area. So we want to develop furthermore in these areas. My second question, for the integration that is going to take place for AMS, the social infrastructure system, which is not affected so much by the economy, was the center, and other businesses were divested. But for automotive systems, I think it is a hardware business, which is the side that would be carved out. But you are going to do that at Hitachi itself. What is the significance of doing that? And with this integration, synergy with IoT would also be expected? Answer. These will be presented later at the next session. But case is the point. A case solution is the focus in expanding the products. So we want to strengthen this business. As you know, service solution business is what we want to focus. We have been saying that, but our Lumada business, social innovation business feature is that operation technology rooted in products and also IT together. So products, OT, IT combination. That is our feature. So To give up hardware and to concentrate only on software and service, that is not what we intended to do. We will hold hardware that we must hold, and related controls, operation technology, or knowledge about the industry will be kept. And by doing so, I think we can make use of our strengths. So for each product business, strengthening each product business and develop a business that can compete globally. And also, if a certain scale is necessary, we will also keep that in mind. So to expand the scale, accompanying profitability, and strengthen the business. To strengthen every product business that needed to be strengthened, that policy remains unchanged. Products, OT, IT, we want to make use of the strengths of these. We have always been thinking about that.
他にご質問いかがでしょうか。
Any other question? Question. So if you can briefly share with us 3 ideas. First is related to the downward revision on the guidance, and also the impact of the listed entities were quite large here. So any ideas about the reorganization for the second quarter? So are you going to accelerate the reviewing of the reorganization of the listed entities? Would you share your ideas with us? So downward revision, the main reason is FX and also the listed subsidiaries, a downward revision of the subsidiaries, that is, as you rightly mentioned. So initially, we have the parent subsidiary listing. So we have 4 subsidiaries listed under this framework. So in terms of the capital scheme, capital structure, we are consistently reviewing the state of capital with the subsidiaries. And within the current midterm plan, we would like to come up with a conclusion of some sort. So especially this time around, metals, Hitachi Metals, had conducted quite a significant downward revision, more so than expected. And that is because Hitachi Metals is going through a really dramatic, bold structural reforms. So we have to make sure that that is taken through and through. And on the other hand, we would like to consider what would be the optimum structure for the overall group. Thank you. About the operating climate for the second half of the year. So we have the U.S.-China trade friction and also deterioration of Japan-Korea relations. And of course, recently the typhoon impact as well. Taking those into consideration, are you confident that you can achieve the second half guidance? What should we be concerned about? Answer. So in terms of the macroeconomics environment, the trade relations, and so forth, it is very difficult to have a clear forecast. It continues to be uncertain about these situations. Therefore, in terms of the guidance for the second half, we can only say that we expect to see tough in terms of the demand situation, especially in the overseas market, China, and so forth. So based on that assumption, we do not believe the revenue would recover dramatically. And based on that assumption, we will continue to reduce costs, reduce the fixed costs, and the initiatives will be accelerated going forward. So these are common policies for all the segments and all the sectors. And more specifically, for Japan-Korea relations, we will not be impacted directly from this relation. And also related to U.S.-China trade frictions, rather than considering the direct impact, it is more about the overall deceleration of the economy. This is what we should be concerned and be cautious of. Also about Brexit, it is difficult to see how much impact would it pose on our business. But in the UK business, we do have railway business as a major entity. So in terms of the production system, then the supply chain, we have to make sure that it is established in UK, Europe, more specifically in Italy. So the production system will be solid, and the supply chain, 70% has been locally produced within the UK. So that has been established already. Also, looking at the orders outlook, it continues to be brisk. So the backlog is 2.7 trillion in amount. And therefore, so we had a large sales from IAP from the previous fiscal term, and we have orders related to that. So the backlog is actually on the increase as we speak. Also, the impact of the typhoon. So in some of the business bases, offices have been flooded due to the typhoon, but we have not seen a significant impact on the production so far. So in terms of the suppliers, actually there are many suppliers who were impacted by the typhoon. However, whether it would pose a direct impact or not, it is not clear. However, we do not believe that it would be a substantial impact. We do not believe so. And also for the customers, some of the products that we have shipped in the past have been impacted by the typhoon due to flooding. So we would like to assist in the restoration and recovery of the operation vis-a-vis the customers. The third question is related to automotive parts. I believe there will be a briefing after this. But if you look at today's share price, it is not favorable, as that was my first impression. The reason being the profit margin is not so high, and you're expecting to increase the proportion of this business within Hitachi Limited. That could be the reason why the share price has been sluggish. So what is the significance of increasing the automotive system? What are the probabilities of spinning off this operation in the future? So this is not just answer. This is not just the number. First of all, we would have to have economies of scale and leverage on that to reduce on the cost. That is the first point. And also, we would like to converge on the development resources to enhance the efficiency of R&D. So this is not just simple addition. This is more about multiplication to increase the profitability as a whole. So by becoming the global leader, we believe we can enhance the profitability. We believe that is the nature of this business. Thank you very much.
そちらの前から3番目の男性の方お願いします。
すみません。
Question. I have two questions. As was mentioned earlier, about the four listed subsidiaries. For Hitachi Metals, you talked about you'd like to keep watching the future reorganization, but what is your current evaluation of the three companies at the moment? Answer. For all of this, the four listed subsidiaries, the optimum structure is always sought for. What should we do to strengthen the business? What is the best solution? We are always considering that for all the four companies. Question. My next question for life sector. I think this was an issue, but it seems the profit margin is recovering compared to our previous term. This was the effect of cost reduction, I believe. But what were the major factors that contributed to cost reduction, and is this sustainable? Answer. In the first half, for the life sector, cost reduction. The major factor is the automotive system. As you know, from last year, this has been continued with the president and a zero-basis reconsideration of the cost, improvement of the cost, and structural reform was also conducted. And we are starting to see those effects. And I'm sure the structure has improved, and this is sustainable. In addition, for the white home electrical appliances, including cost reduction, cost reform, we are working with that. The same for healthcare. A lot of structural reform is going on. And I believe these are sustainable. But the business environment is really tough. So we have always tried to move forward and continue with cost reduction. For example, for automotive systems, the operating profit margin quarter by quarter for the first quarter 2018 was 2.2%, the second quarter 1.9%, but this year Q1 is 2.7% and the second quarter 5%, and the third quarter previous year was 3.6%, and for quarter 7.9%. So in 2018 there was improvement quarter by quarter. So we are accumulating effects of structural reform, and in the third quarter, fourth quarter, I believe by continuing with cost reduction and structural reform, the fourth quarter of 2018, it was 7.9%, but this year the plan is to achieve 10%, and we are making such plans and we implement our measures.
ございませんでしょうか。
A question? So this is a detailed question about the nuclear business. Two questions I'd like to pose. First, what you have announced in January, the horizons, freezing of the horizon business. So Mr. Higashihara, CEO, mentioned the horizon asset will be minimized, and they would consider divesting the business. This is what he has mentioned. So what is the progress so far? Is that continues to be the direction you seek? So in terms of horizons operation, we have not seen any dramatic movement so far. So this is the UK authority. We have continued to conduct dialogue with the UK authority, but the asset has been downsized from before. So it is kept at a minimum level, and likewise with the manpower as well. So in terms of the operation, it is still steady. So if there are any other movement, we would like to cope with that. So minimum asset, minimum organization, that is the current state, and we'd like to keep it that way for the time being. So if that's the case, what CEO President has mentioned in January, you would still explore possibility of divesting the business then. It is hard to say how this will pan out. So UK government itself, they are facing very difficult issues such as Brexit, and also but the nuclear power business policy related to the nuclear power business, there's nothing solid that has come about from the UK authority so far. So for the time being, we would like to keep the business at the minimum level. Of course, as an option, we would be open to any options, and we would like to seek the optimal solution. Then, so question. So GE, what is the number of personnel that you have so far? How far have you minimized the operation about the personnel? Answer: we do not disclose the number of human resources or personnel. We do not disclose that. Question, and about the licensing and approval process. So development DCO, development consent order DCO, as of October 24th, I believe that was the timing for the approval. But now it has been announced that it will be extended to next March, and based on the fact that because of the necessity for environmental assessment. So would that impact on your decision on Horizon? Would this decision pose an impact on your decision? Answer: so what needs to be done under the minimum structure, minimum scheme, and of course we would conduct the minimum dialogue with the authority. So based on that, we do not believe it would pose any significant impact on our decision. Question, one last question. So several months ago in Japan, so Tokyo, EPCO, and Chubu, and Toshiba, and Hitachi, with the four entities, you have mentioned that you reached a consensus to conduct a joint business. So Higashinori, of course, that is a new development project that is under consideration. So as a supplier for Hitachi, this joint operation of the four companies, what will be the benefits for Hitachi? So of course, for the APCs, they would like to reduce the cost by involving the suppliers. But from the supplier's perspective, that is from Hitachi's perspective, what is the benefit you would like to seek? Answer. So in terms of the nuclear power business, so given the current operating environment, so it is the new, we cannot expect to see new construction of the nuclear power plants. So it is difficult for each of the separate entities to survive and operate on its own. So that is why we have reached a consensus to jointly consider the future outlook of the business. And so that is the background of this idea. But as we speak, nothing concrete has been decided. Therefore, I decline to comment any further. Thank you very much.
他にご質問ございませんでしょうか。じゃあ一番前の方お願いします。
Question. My first question about China and Southeast Asia results are not very good. And the reason for those results, could you let me know the details? And for China, from last year, we are seeing signs of change. But I don't think you are doing nothing. So what are the measures that you are taking? This is my first question. Answer. For China, the economic growth of China is slowing down. In particular, our major business is the elevator business and also construction machinery. For elevators business, the number of units is growing steadily compared to the previous year. However, the absolute product mix we had the high-end products of high-rise buildings, but the middle-end products are increasing, so the average sales price is declining, and as a result, total revenue is declining. So we already knew that. So looking at this trend, the structure, we already knew this business trend. So from 2 years ago, Hitachi's plant in China, we strengthened the procurement sector to reduce the cost. So we have proceeded with that, and those effects are seen, and now the building systems revenue declined compared to the previous year, but we could secure a similar level of income compared to the previous year. And another point is that for the high-end elevators, for high-rise buildings, we have to capture high-quality customers so that we can strengthen the sector again, so that we can have profit in the sector. So we want to approach these deals and further strengthen that ability. And for construction machinery, still investment like hydraulic excavators, investment in the sector, this has not yet recovered. This sector has not yet recovered, but in general, Japan and North America, in general, are doing well, so there is no drop from an organic perspective. And in Asia, I don't know how much is the impact of a trade friction, but there is some decline in general. However, Asia is declining for Hitachi High Technology in Asia. Liquid crystal displays for the Taiwanese customers. The exposure devices is declining for those customers, but semiconductors is doing well in different region. So in general, the result is good. So Hitachi Chemical and Hitachi Metals revenue in Asia is declining because of semiconductors, automobile-related customers. These are the areas that is declining. So cost reduction measures are implemented in the sectors. Question. I think you will talk about it later. Your automobile business, you have been conducting structural reform, you have a history and you have strengths. But at the moment, what are the management issues? What are the areas that there are resources shortage? Answer. We are covering a broad range of products. With this integration, the scale will get larger, but as products with high profitability and with strength, we will focus on those products. And what we have been doing so far in this sector are the batteries for automobiles and Clario and other businesses were divested by concentration and selection. And going forward, to become a real global leader, products and services will be focused going forward.
よろしいでしょうか。それではもう定刻を過ぎてしまう。
We are past the allotted time, so with this, we would like to conclude the results announcement for today. Thank you very much.